Hi, it's Ginny Fay with Real Estate One, and I'm here with Ben Williams from Benchmark Mortgage again. And gosh, I always love talking to you because you bring me so much information on the mortgage market. So what's going on?
Oh my gosh, Jenny, it's, you know what, I just love the real estate market. I love helping clients. I love helping realtors and just getting that information out there. There's so much to be excited for nowadays when it comes to real estate that, or, you know, I don't think a lot of people are taking advantage of.
I know.
There's a lot of tools and resources out there that really is a buyer's gold mine to help them get into a home.
Explain.
Well, I mean, there's a lot of different factors. You know, what I've seen, because there's still, even though the interest rates are still low, relatively speaking, but we come out of an era where the interest rates are in the 2s and 3s. So
Right.
we're, you know, people are saying, oh my gosh, there's a lot of high interest rates, even though historically they're not.
Yeah.
But
I remember when they were 18%.
Oh, I know. I remember my first house when I was, you know, looking to buy one. It was, 16%. I just could not believe it. But, you know, we had the benefit of history on our side.
Yes.
So.
Okay, you're saying we're old?
I'm just saying we're very historic.
Yeah, okay.
But no, I mean, but when you stop and look at it, you know, there's a lot of folks that didn't experience that. So this is their normal. What I've been advising clients to do is maybe looking at a 3-1 buy down or 2-1 buy down or 1-1 buy down.
They're a good product.
They are a very good product, and that really helps. What I like to say is it helps nurse the buyer along to, one, get into a house at a lower interest rate, for the first couple of years. Give the interest rates enough time to come down, and then you can refi later to a lower, fixed rate. The beauty behind a 3-1 or a 2-1 or a 1-1 is they allow you to buy down the interest rates for the first year, 2, 3 years, whatever you're using, a 3-1, 2-1, or 1-1. And what that means is that if you're doing, we'll say, a 7% interest rate, and you want to do a 3-1 buy down, so your first 3 points, your first year's payment is going to be at a 4% interest rate versus a 7% interest rate. It's locked. It doesn't go any higher than 7%, but in your first year, you're only paying 4%. Then your second year, your interest rates go up a point to 5. Third year, 6, and then back locked to 7. The reason why I think that's the beauty of it all is because the feds and all the chief economists out there, a lot of people that are a lot smarter than we are, and it's kind of keeping an eye on the market, they're suggesting that the interest rates will come down by the end of this year, early first quarter next year.
That's what I'm hearing also.
And the main reason why is because they need to bring the economy out of recession. So when those interest rates come down, and they are going to come down, take that time to refi. That way you're not going into a 7% interest rate. You're staying in that 4% and stuff like that. So that's what I've been advising people to do.
Plus, if they're paying the points to buy that interest rate down, they can write that off on their taxes.
Big time.
Seriously.
It's a huge
because
benefit.
it's interest, and you can write off the interest on your mortgage.
I am surprised that there are some people out there that I've been talking to that feel that tax break has gone away, and that tax break has not gone away.
No, not at all. And even if the seller pays those points to buy that rate down, the buyer can write that off on their taxes.
Exactly. And
which most people don't know.
Most people don't know, and that goes back to, you don't know what you don't know. That's why you want to reach out to professionals like us.
Yes.
So that way, it's our job to make sure you know. And with the 3-1 and 2-1 and a 1-1 buy down, the sellers basically contribute their funds for that interest rate buy down. And it's just like any other seller contribution. Getting with an experienced realtor like yourself, you can negotiate the offer price to accommodate those seller contributions, and to where it doesn't really affect you as much as it would if you're going in at a 7% versus a 4%.
Right.
So
Yeah, because you can always add it to the purchase price and include it that way, and as long as the home appraises for that higher amount, and most of the time it does.
Most of the time it does, and
Yeah.
especially in a seller's market like this.
Mhm,
Now there are instances where the house may not appraise,
mhm.
but if a buyer is using a VA home loan, he's got a golden ticket. And the reason why I say that is because the VA is the only loan product out there that allows you to negotiate the appraised value twice.
Yes.
And what that means, folks, is that an appraiser says, we'll use an example of a $250,000 home. And the seller contributes $10,000, which brings your purchase price to $260,000. The reason why they're doing that contribution is to pay down your interest rates for
Right.
the first 2 or 3 years. So if the appraiser comes back and says, I'm sorry, Mr. and Mrs. Buyer, this home only appraises for $250,000, not $260,000. The appraiser will issue what they call Tidewater, and it's not a social media challenge, okay, folks? It's a phrase that the VA uses. But anyway, he or she will issue Tidewater. And what that does is that gives the realtors, both the buyer and the seller agent, enough time to gather comparables and say, based on our comparables, we feel that this house is worth $260,000. Great. But as you probably know, a lot of appraisers are going to say, hold your horses. My numbers are good. I don't agree with your numbers.
Right.
Well, then that's great too, because then it goes into reconsideration of value. And what that does is that removes the appraiser out of the equation. And now the loan officer and the Regional Loan Center, RLC, and in this area, Traverse City, it's out of Cleveland, Ohio.
Okay.
And what the loan officer will do is take those comps that the realtor supplied and put forth a report to the Regional Loan Center to justify a $260,000 valuation. And a majority of the time, the RLC will agree with us and get that. I've only seen a rejection done maybe 2 or 3 times. One example that I had was last year, where I had a veteran had purchased a house, and we went in over asking. Well, the valuation came back. The appraisal came in at $320,000. House we had it at $360,000. The RLC granted us appraisal approval at $360,000.
Wow.
A $40,000 difference.
That's amazing.
That is,
So-
and conventional loans won't do that.
No, not at all.
FHA won't do that. Rural development definitely won't do that. So the VA is the only one that allows that. So when you tie in a 3-1-2-1 into a VA type loan, the veteran is your strongest option for those type of deals. So, but irregardless, it's really no sweat off the seller's back.
So bottom line is, now's the time to buy a house.
Oh, I couldn't agree with you
With
more.
all of the options that are available, yes, it's a seller's market, but, and there are a lot of buyers out there. I'm not gonna lie to you and say, no, you don't have competition, because you do. However, buying a home is the very best investment you could ever make to build wealth.
Yeah, I agree wholeheartedly, and there's a lot of benefit. There's a lot of options out there now for a lot of different buyers that really would help get you into a home. I saw a statistic the other day where an average homeowner that just started out buying a home, first, second home, whatever, the average homeowner has over $300,000 in net worth, whereas a renter.
Well, I can show you that right now.
Yeah.
Here is the median rent increases since 1988.
That's incredible.
That is unbelievable. So if you're renting a home, you have nothing to write off on your taxes. You are paying the mortgage for your landlord. And here is home price changes since, and this is since 2022. Excuse me, I'm sorry, this is from 1991. to 2022. In Michigan alone, the value of the homes have averaged an appreciation of 229.3%.
That's
Think about that. Can you get that on the stock market?
You won't be able to get that on the stock market. And you know what I also tell buyers is and renters is that if you're worried about a 7% interest rate, as a renter, you're paying 100% interest rate.
That's right. Absolutely.
So you date the rate, you marry a home.
I love that saying. Ben, thank you so much. This
My
has
pleasure.
been so informative. I hope you've enjoyed this and gotten something out of it. And always call Ben. He's with Benchmark Mortgage. What is your phone number, Ben?
231-632-7888.
Very good. And I'm Ginny Fay with Real Estate One, 231-360-7822. Thank you, and we'll see you in a couple weeks.